A slow consumption rate and higher fuel prices brought about disappointing retail sales for May. Economists say this and other factors may influence the Reserve Bank to once again hold off on interest rate hike next week. The expected drop in the fuel price next month may not have much of an impact on consumers as they struggle to keep up with high food prices. Earlier, I spoke to Managing Director of Lehumo Capital, Maudi, Lentswane, and I asked him about the latest manufacturing figures and business confidence and what they mean for the South African economy.
We saw those numbers. I mean, those numbers, what they're telling us, it's an economy that's obviously under a bit of pressure. We know that we've got electricity crisis. You know, the economy is not growing that well. There's job cuts as well. So it's not surprising that we saw that number, slightly lower than expected, from the previous period. It's indicative of an economy that is really struggling to come right.
How will the expected drop in the fuel price have an impact on the manufacturing industries and on the consumers as well?
Any drop in petrol prices is always welcome. However, the impact of it, obviously, it depends on how big it is. And we know that we're expecting in July just a slight drop in the petrol price. We've had, beginning of this year, we came from the level where the oil price was sitting at a lower level. We had enjoyed all the reduction in the petrol price. But up to April, we saw all those benefits of a lower energy prices being captured or reversed, being completely taken by the government, because the Minister of Finance then announced all those taxes, increases in taxes. So all those benefits were all completely taken by the Minister of Finance. So the consumer never really saw those benefits being passed on to them. And that's one of the reason why we've really not seen the improvement. Instead of having let those benefits filter through to the consumer, we saw the petrol price increases as a result of higher taxes, your road accident fund, your special levy, which was, or the fuel levy which was levied. All those never really resulted in the consumer benefiting.
Looking at manufacturing data and business confidence, it looks like things are not looking good for the economy. Where is this taking us?
I think it's very tough, for those sectors at this point in time. I mean, the reality is you've still got structural problems, whether it's electricity problems that we've had, or even the lower commodity prices that we've seen in the gold sector, the platinum sector. Those are some of the fundamental problems that, unfortunately, are not going to help the economy in the near term. We all have to wait and see exactly whether the situation improves going forward. But I think in the immediate term, the economy is going to remain well under pressure.
What are your views concerning Janet Yellen's announcement yesterday that she's likely to increase interest rates? And what about the timing thereof? Because it looks like it's making the emerging markets to remain volatile because they don't know when exactly the announcement is going to be made.
They've kept the interest rates at zero for a very long time. And it's important for them to return to normality, to normalize the situation, the monetary policy. So, yes, they do look at other factors that are happening outside of the US, such as Eurozone. She did indicate that it was in their discussion, the whole Europe situation. They can't exclude themselves completely away from the world. But at the same time, it's very important that they begin to normalize the monetary policy on their side. Because, as she indicated yesterday, leaving it at zero for a very long time could also have a negative impact going forward. The timing is important. And I think what is also encouraging in her statement is the fact that when they start increasing interest rates, which she is adamant that is going to happen before the end of this year, they're saying they're actually going to increase it at a gradual pace, which is why the timing is important, because if they leave or they miss the timing, they could actually find themselves in a situation where they have to increase at an aggressive rate, which will not be a good thing.